Hey guys, and welcome to The Rant. Today I'm talking about central banking and information I've learned over the past year that has really changed my impression of whether it's even necessary. So to start off today, I'm going to talk about where central banking came from. We'll talk about how it works today, especially in the US. And we'll finish off by thinking about whether central banking is a model that we want to stick with. So I saw a video that we'll put in the comments that was one of the first to really demonstrate to me how new central banking is. Central banking originally emerged in Europe in the early 1600s. So it's really not even that old. And it started out in Europe. As you can imagine, many governments used it to finance war and kings used it to build castles. Central banking starts out as a niche thing that's occurring in Europe. Well, America becomes established, and for most of our history, we haven't had a central bank. It's in 1913 on an island called Jekyll Island that was owned by JP Morgan, one of the huge financiers and richest men in America at that time. JP Morgan invited the Rothschilds and the Rockefellers to Jekyll Island. They devised a plan to create a central bank, because this would allow them to lend 10 times more money than they were currently doing because of how fractional reserve lending works. And it created a huge new windfall of profits because they were receiving money from the government effectively for free and able to lend it out at an interest rate to the public. Now, even though these families were so powerful, it didn't mean that they didn't have to get Congress to enact this. So the first time they tried, they actually failed. The second time, though, they were able to get the right political supporters behind them and get the Federal Reserve created. All right, so think about the implications of how economies change when banks at the beginning, let's just say, for example, have $100 million of deposits on hand. That bank could only lend out $100 million of deposits. Now, with fractional reserve banking, you can lend out 10 times as much, or whatever the government decides. That has a huge rolling impact on the economy because it creates a run-up in prices. Anytime we see loans flood a market, prices go up. It first happened in real estate in the United States. It's happening to stock prices right now. Central banking has a very important role that it plays in all of this because it's defining how much banks can lend. To some extent, it's defining what they can lend to and for. This whole idea of running up prices has a huge negative effect on what I'll call the little guy. This person needs the economy to work for them. When we look at fractional reserve banking, it's really a scheme that has been created by the governments. In fact, it was created by the major banking families in the United States. Banks were created by the rich for the rich. Now, we can't have a conversation about central banking without talking about the national debt, because as our debt grows, there's going to be a greater pressure in the United States to make the Federal Reserve lose its independence. And at that point, we're going to print even more money. That's a scary proposition for anyone holding cash in a bank account. And I'm a big proponent of doing what we can to balance the budget and get rid of fractional reserve lending. If you increase the amount of debt that there is in an economy and you lend to companies and people 10 times the amount that you're naturally supposed to, what's the outcome of that when natural boom and bust cycles happen? They get 10 times bigger. And so when I look at our current debt, which is sitting above $20 trillion right now, and we look at the fact that it's going to increase by another trillion this year, we're eventually going to hit a point where we can no longer pay our debt. I mean, there's no way we could tax ourselves out of it. Okay, so our government is going to have a couple of options here. First, it could default on our debt. And that means that we declare bankruptcy as a nation and we wipe all the debt off. Interest rates are going to skyrocket. Economy is going to fall into the worst recession we've possibly ever seen. Option 2 is that we inflate ourselves out of it. And so we pay off the debt, but with currency that's worth, fractions of a penny versus what we have today. So people might view that alone as maybe a short-term solution to the problem. Sure, it's okay. The central bank loses its independence. We paid off the debt and everything's good now. Now, when we have a central bank that is politically motivated, we're going to see government expenditures increase even more. So what we would be looking at in that case is a central bank that is exponentially printing money until an eventual collapse. So that leaves me at a final conclusion, which is cryptocurrency is going to replace central banking. What that cryptocurrency is or looks like, I don't think it's going to be Bitcoin. So when we finally switch to a cryptocurrency, we're going to see an improvement in the economy that affects the people who have been forgotten, which are the 99 percenters, the 80 percenters, the people who are not saving a whole lot of money and getting left out of the current economy. Guys, cryptocurrency is the future. And if you care about the lower and middle class and think that the banking system and economy that we have today isn't working for them, I strongly encourage you to learn more about cryptocurrency. I'm not saying that Bitcoin is going to replace the US dollar at all. But what I am saying is that some new form of decentralized money will. And when that happens, we'll start to see this huge wealth disparity start to collapse finally, because it's just still not happening. And we all know another recession is coming. What are people going to do then? So if you want to be part of the solution, do what I did this year and learn more about where central banking came from and think about whether it's still relevant and whether it's helping society at large, because I'd argue it isn't. I hope you found this video educational. Let me know what you think about this topic in the comments and whether you think central banking is needed, if cryptocurrency can replace it. Let me know what you think the solution might be, because this show is really meant to open a dialogue with smart people around the world who are seeing these issues and want to do something about it.